Let's get right into it and see if TaxMemory.ai can handle another tough tax question. An LLC acquired a $92,000 SUV over 6,000 pounds on February 1, 2025, and placed it in service at 70% business use. What first-year deduction is available after the Section 179 SUV cap, bonus depreciation, and listed property rules? And here's our answer. Assuming 2025 law with 40% bonus depreciation, no mid-quarter convention, and no Section 179 income limitation issue, here is how the first-year deduction would work. The SUV costs $92,000 and is used 70% for business, so the business use basis is $64,400. Because the SUV is over 6,000 pounds gross vehicle weight rating, it is not subject to the regular luxury auto annual caps, but it is still subject to the special Section 179 SUV limit. For 2025, that SUV limit is $31,300. Since the vehicle is used 70% for business, the allowable Section 179 deduction is limited to 70% of that cap, which gives us $21,910. After Section 179, the remaining business basis is $42,490. Then we apply 40% bonus depreciation, which gives us $16,996. After Section 179 and bonus depreciation, the remaining basis is $25,494. Regular MACRS depreciation is then applied to that remaining basis. Using 5-year property, the 200% declining balance method, and the half-year convention, the first-year MACRS rate is 20%. That gives us about $5,099 of regular MACRS depreciation. So the total first-year deduction is $21,910 of Section 179, plus $16,996 of bonus depreciation, plus about $5,099 of MACRS depreciation. That equals about $44,005 total in first-year write-off, assuming business use stays above 50%, and the taxpayer meets the listed property substantiation requirements. The key takeaway is that the vehicle qualifies because business use is 70%, which is over the 50% threshold. But if business use later drops to 50% or less, the Section 179 and bonus depreciation can be subject to recapture under the listed property rules. TaxMemory.ai also lists the verified authority where the answer was sourced from, so we can see exactly how it got to the conclusion. It then gives us secondary links for further guidance if we want to research the tax situation more deeply. Then, we get the next action steps to take with the client. First, we need to confirm that the SUV actually meets the 6,000 to 14,000 pound gross vehicle weight rating definition for Section 179 SUV purposes. Then we need to confirm that the 2025 bonus depreciation rate of 40% still applies to the client's facts, and that there has not been a later law change. We also need to make sure the taxpayer has enough taxable income to fully use the Section 179 amount, and that they are not limited by the overall Section 179 threshold or phase-outs. Finally, we need to make sure they keep strong mileage and business use records showing more than 50% business use. If that business use is not supported, the Section 179 and bonus depreciation deductions could be disallowed or recaptured later. And if we wanted to go even deeper, we could ask TaxMemory.ai to show the Form 4562 line-by-line entries that would produce these numbers. TaxMemory.ai did a perfect job here because it did more than give a rough vehicle write-off estimate. It followed the correct order of the calculation, adjusted everything for business use, flagged the SUV weight requirement, and pointed out the listed property rules and recapture risk. That is what makes it an essential tool for any type of tax professional. It gives the answer, the reasoning, the authority, and the next steps in every response.